Good afternoon, everyone. Ahead on the marketplace, finding a replacement for ExxonMobil. We'll discuss what the approach should be as GNPC signals investor interest in the Deepwater Cape 3-Point project. Also coming up, National Development Bank expected to take off next month. We hear from the Finance Minister, Ken Ofori-Atta, as government describes it as a game changer.
100 billion city program comes in, and in there is the Development Bank as one of the enablers and to be able to cross over to where we want to go as a nation.
And we'll discuss how insurance brokers are faring during this period of the pandemic. It would interest you to know what the latest figures are pointing at. My name is Darryl Kwal. Thanks for joining us on the marketplace. We will be right back. Right, we begin with this one. The Finance Minister, Ken Ofori-Atta, says the National Development Bank, which will take off by the end of July, will be a game changer that will transform the country's economy through industrialization and creation of more job opportunities. This is because it will provide long-term funding of up to 15 years to businesses at relatively cheaper lending rates. There's more in this report.
Mr. Ofori-Atta said the National Development Bank is part of the Ghana Beyond Aid agenda, which hinges on 3 pillars and will be different from that of the Agricultural Development Bank and the National Investment Bank. He was speaking at the corporate dinner series for CEOs of large corporates organized by the Association of Ghana Industries last night.
The second pillar is one of trying to get a consensus amongst all of us as CSOs, parliamentarians, politicians, citizens, as to a broad consensus of where we are going as a nation so that we can argue on the margins, not on every issue, and therefore without one language, we are not able to then pursue, a committed path of development. So that's the second one. How do we get a conversation going so that we are in agreement on broad principles? And then the third leg, of course, is economic transformation, which is where the design of the Ghana Cares program, which is a 100 billion city program, comes in. And in there is the Development Bank as one of the enablers and to be able to cross over to where we want to go as a nation.
President of the AGI, Dr. Yao Edujemfi, told Joy businesses have been recovering, albeit slowly, after COVID-19 restrictions eased. However, he expects some further release from government in the mid-year review budget that is expected to be tabled before Parliament latest by August this year.
The business as a whole, since post-COVID, things are improving, but it's at a very, very slow pace. Most companies, CEOs and captains of industries are really try to get grasp of things, how to restructure their operations, particularly in terms of our cost of operation have gone up because, of course, we have to be buying face masks and putting all these things, in place so that at least our workers will be protected. So the cost of production has gone up in a sense, and we are spending more money in making sure that our employees are protected. However, customers are really not buying now. So in terms of productivity, most companies average, for a little survey we did, in terms of productivity has come down by 35%. So, but with time, we think that things will improve, and we are all hoping for that to happen.
The corporate dinner series brought together captains of industry from manufacturing, agro-processing, and pharmaceutical. The players, however, expressed worry about the reduction in benchmark port value by 50%, which they say is making them to lose market because of influx of imports.
Now, energy expert Kojo Poku says the exit of ExxonMobil will not deter investors interested in the country's oil fields. ExxonMobil, a US-based oil and gas firm, exited Ghana's oil fields and subsequently relinquished 100% of its oil exploration rights in the Deepwater Cape 3-Point block in the western region, explaining that it was unwilling to extend its initial contract signed in 2018. But Mr. Poku tells Joy Business that Ghana is not short of options after the exit. He joins us via Zoom to throw more light on this. And thanks so much for your time, sir. I'm not too sure I've heard your thoughts yet on ExxonMobil's exit recently, but what did you make of how things turned out? We initially had great hopes.
Well, good afternoon and good afternoon to your viewers. I don't think as a nation we should worry too much about a corporate decision made by ExxonMobil. Ghana is still an exciting destination when it comes to upstream oil and gas. As I mentioned earlier, we are still young in that industry. We've only been doing production for 10 years. Big companies like ExxonMobil have certain parameters before they invest in the country. They would like to see large oil deposits. They would like to see big exploration fields to last them for about 20 to 25 years. I don't think they saw that in the block that they had. And in some instances, when they don't see that, they would have the option to look at other mergers and acquisition in our upstream market. Maybe they did not see that. That is also hampered by the international view that some companies want to cut carbon emission in 2030 to 2050. So I don't think their exit is entirely to be blamed on the environment in Ghana. I think the prospects in Ghana is very positive.
Yeah, because I was going to ask you if the concerns raised about our oil deposits was legitimate enough for ExxonMobil to exit the country.
No, you see, every company has their investment ratios. ExxonMobil is a huge company, and when they invest in a country, they bring all their investment and their resources, and they have a base. You know, when you go to Nigeria, you look at their investment in Lagos and other parts. In some areas, they have a whole estate where it's only ExxonMobil staff that live there. So they have a way of doing things. And maybe in the short to medium term, they thought they would rather not go further with the Ghana prospect. I don't think anybody should read into it that the fields in Ghana are not prosperous or are not as prolific as they should be. I think they are, and smaller mid-sized companies can do very well in that exploring that block.
And so there were fears other investors would lose interest in our oil fields because of ExxonMobil's exit that you have discounted. You don't agree with that. To what extent do you think that we are going to be affected by this exit? You already point out that, you know, ExxonMobil, when it's coming to your country, comes with other investors as well. To what extent do you think will be impacted?
Well, if you know the history, as far back as I think 2009, 2010, ExxonMobil was aggressively looking for the Tullow block. I think they wanted to buy into the Jubilee field. That didn't happen. They came back again, and they've gone a 2.5 years exploration cycle, and they said, look, they are not. It doesn't mean they can't come back. What I'm saying is that mid-sized companies, okay, might be able to explore that field and look that they can get returns on their investment. People are saying that we should look at tax regimes and all that. I think it's too early for us to panic. People have cited ACARE. I think ACARE has their own peculiar reasonings for doing what they're doing. And in due time, we would all see it. But mid-sized companies that have good liquidity can still make some good money. I honestly don't think the fear that people have that because the international or Europe and America are cutting carbon emissions up to 2050 means that crude oil is going to go extinct. It's not true. Crude oil has another 50 to 80 years life on this planet, and companies are still investing in upstream business.
And well, here's a good part. GNPC already assuring that there are many investors looking to replace ExxonMobil. Take a listen to Group Managing Director for GWEL, Kwame Osei-Prempeh. Tell us about that.
Believe that there's no way that you cannot have another investor. No, there's no way. Indeed, you know, Exxon is the largest explorer in the world. Yeah, and they believe, you know, the way they assess their risk is different. So what if everyone says that they assess the risk and the quantity that they will get is not to their satisfaction, any middle level explorer and the oil company will find it suitable. So as at now, the GMPC has assured us that people are knocking at their doors. So now that if a zone goes out, that means that our investment has gone. Indeed, what we are even hoping is that we've already expended money in the relationship with Ezon. So if a new partner comes in, our investment in Ezon is going to top up our 5%. So we may even end up getting about 7 or 8% a share in the new deal instead of the 5%. So we believe it's not going to be difficult at all. We're going to get an investor coming in.
So Kwame Osei-Prempeh saying there that people are already knocking at the doors of the GMPC. That sounds good. Just wanted to find out from you, what options should we explore? What should be our approach this time in determining which investor to select?
Well, as you are aware, the new petroleum law does not allow a one-on-one negotiation as it was the case in the past. Now, all petroleum awards has to go through a tender. So I'm thinking that block will have to come back into the basket. And when the ministry and GMPC decides to do the next tender round, that block will be up for tender. I don't know that if there's anything this year, maybe next year they will prepare the documents for bid rounds to happen next year, because we might have more information on some blocks that is being cancelled, because there's a lot of companies that are sitting on blocks that are not doing anything. And to basically make sure that our upstream is very vibrant, we need to abrogate those petroleum agreements and put them back to tender. Yes, we've come out of COVID. 2021 is not the best time to do this. Even 2022 is a bit slippery. I'm thinking maybe 2023, the world economy will have fully recovered. My caution to GOIL will be that they should not be too much in a hurry to be taking up percentages in these oil companies at this early stage where the risk is high. They should bid their time, and when the companies, because if GOIL decides to go up with their percentages, it means they have to contribute sizably to the exploration cost, which is risky. Okay, so I think that they should just keep to the 5%, take it baby steps, stick to the little percentages. When there is the discovery, then they can go in and basically exercise an option to up their investment. At this stage, I don't think GOIL can afford to be risking the little money they have in exploration at this stage.
My last question to you was going to be about timing, but you answered that perfectly. You're saying we should look at the next couple of years and not be in a hurry to make a decision.
Yes, definitely. In terms of 2021 and 2022 is going to be recovery year. The price of crude is really high now. It might just be because the OPEC countries have cut down production, and if they bring production back to the normal levels, the price of crude will come down. So yes, companies will be looking at these prices and indicators around the world to decide when they will start doing more drilling or more production. 2022 will give a lot of companies a lot of indication of what lies ahead. So as a nation, I think if we want to do another bid round, it should be somewhere in 2023.
Great stuff. Thanks so much, Kojo Poku, energy expert there. Thanks for your thoughts on this matter. I appreciate it. You're watching The Marketplace. Now, a recent quarterly release of unaudited financials for 2020 by the National Insurance Commission has revealed that regulated broking firms are still dominating Ghana's insurance intermediary space amid the COVID-19 pandemic. The report indicated that a total of 79 brokerage firms recorded in excess of 112 million cedis in 2020, as against about 134 million cedis in 2019. The 2020 performance highlights the longer-term trends transforming insurance broking in Ghana, which indicates how brokers will recover in the coming years. We're joined by Vice President of the Ghana Insurance Brokers Association, Shaibu Ali, with some expert analysis. Grateful for your time this afternoon. First of all, what do you make of those figures I mentioned?
Thank you very much. And good afternoon to your listeners. Well, these are the figures that the regulator has put out. Those are the figures we have to work with. The first thing that strikes one when you look at those figures is that it is ironic that in the COVID year proper, people are doing, we are doing better. Maybe I'm mixing it, but you notice that in 2019 we did better than what we did in 2020, and that surprises everybody. That is, we are still trying to unravel what led to that. One of the reasons might be that during the COVID era, people were a lot more afraid, so everybody was thinking about how to consolidate their assets and all that. But these are the figures. There's been a steady growth in the figures over time. What this trend is showing is that the 2020 figures are slightly, the 2021 figures up to the half year, slightly are below those of the full year 2020. But we see how the year goes. By the time we get to the end of the year, we might see a clearer picture of it, yeah.
And the irony of it, as you point out, when the pandemic broke, one of the business lines in the insurance sector we expected to be hit most was insurance brokerage. So what did the trick?
Well, it's all part of the mystery that we are all still thinking about. But like I said earlier on, I want to believe that people or insured or clients were a lot more responsive to their assets and their lives because of the uncertainty that COVID came with. They didn't know what next, so everybody was thinking about how to protect their property. In the face of people shutting down their operations, in the face of some people sending home staff, but people still found time and resources to insure their properties. And that is something that we really need to get to the bottom of it so that we can use to drive insurance going forward. I think that people have come back to the realization that the COVID situation is ironing out, so we are coming back to life as usual, so they can decide not to insure their staff or even insure their lives or their health and all that. But that is I think that insurance broking has largely survived in the system, and it is still a mystery to most of us how that happened. Some of it had to do with measures that brokers put in place. Most brokers had to move their operations from the physical platforms to the online or the virtual platforms, try to service their clients virtually. And I think that is one of the reasons that helped a lot, because most of our offices were closed anyway. People were operating from home for a long time. Even after the lockdown, people still continued to do business from home. Up to date, we still have some of our member firms who are still going on rotation basis. But because of the measures they put in place to give their staff capacity to work from home, this has significantly enabled people to continue to enjoy insurance services from brokers.
Well, I guess this underscores the fact that the broking subsector remains a significant component of the insurance business, because previously there were fears insurance intermediaries will be relegated to the background.
Yeah, so these fears honestly have been there for over 50 years in some jurisdictions. With the introduction of internet in the first place, people thought that the insurance broking has come to a virtual end. But touchwood, insurance broking has survived, partly because of the fact that there are some policies that can be dealt with virtually. And there are some policies too that you cannot do them virtually. You can buy your car insurance on a platform. You can buy insurance for your house or travel on the platform. I'm not sure that if you want an insurance to cover the operations of Joy FM, you want to do that on the platform. You want to meet the person you are dealing with, get to know the person, to be sure that this person has integrity, this person has what it takes to offer you cover. So I think this partly explains it. Insurance broking, touchwood, is not going to die. Most of the broking firms today have started digitalization. People have realized that they cannot continue to sell insurance like they did years back. To walk to the client, to walk to your office, you take the money, you go to an insurance company, get the cover, bring back to the client. That semi-way of operating like a post office is ended. So most brokers have created platforms. Some have apps that their clients can just go on that and then do the transaction on it, get the cover from end to end. They can print out the sticker or whatever that evidences the cover, and then the life goes on for them. So I think that with the insurtechs, insurance broking is going to go again for a long time. The danger that comes up here is that The broking firms in the country are not of the same size. We have very big ones and we have very small ones. Some of the small ones don't have the capacity to do this. So the challenge will be with these smaller broking firms, how they can measure up and survive this challenge. And that's what the association is looking at, how to enable everybody to survive it.
So what can be done to consolidate the gains so far? Because this could go a long way to positively impact the insurance sector's contribution to GDP.
I think that the regulator is on the right track. They have done some things that is helping significantly. The new law is one that you can readily refer to. The new law that has just been passed on insurance, which has introduced some compulsory insurances in public liability, professional indemnity, and marine. I think that when the law was being drafted, we were looking at even group life being made compulsory and workmen's compensation being made compulsory. But unfortunately, that didn't work out. That would have been an icing on the cake for the industry, but that didn't work out. But at least we have these three policies to work with. And we think that with all this being on board and the way the regulator is insisting that broking firms do the right things, they have the right capacity, they do the right operational processes, this is going to carry the industry a long way. And if you realize, the face of insurance broking in this country is changed significantly. Years back, we used to have people who retire from insurance companies coming to set up insurance broking firms. By which time they're already tired, the energy, the hunger to go out, look for clients, is virtually not there. They have the experience and the expertise, but the strength is not there. But we are having a lot more younger generation people come out of the university and go straight into insurance broking. And this is changing the face of insurance broking significantly.
Shaibu Ali, Vice President of Ghana Insurance Brokers Association, great to speak with you this afternoon. Do enjoy the rest of the day. We're taking a short break. We'll be right back. All right, welcome back to the marketplace. The Food Trade Coalition Africa has expressed confidence that efforts to remove trade barriers along the West African corridor will yield positive results soon. According to the co-chair of the coalition, Zaid Hamoui, non-tariff barriers will be a major challenge to the continental free trade area if various governments neglect the call by stakeholders to deal with it. He spoke to Joy Business after addressing the coalition's General Assembly in Accra.
Tariff barriers include internal checkpoints where traders are harassed to pay unapproved charges on their cross-border trading activities. The practice has been described as one of the major setbacks for regional trade, especially along the West African corridor. In an interview after addressing the General Assembly in Accra, co-chair of the Food Trade Coalition, Zaid Hamoui, said despite the challenge, they hope policy-level engagements will be intensified.
And to become more food-dependent, but the barriers remain, whether the internal ones because of the many checkpoints which are leading to long delays and losses in especially in perishable products, for example. And then with the actual, let's say, the procedural aspects affecting regional trade. So regional trade has not stopped, but that doesn't mean that we have free movement of trade across West Africa, as you know. There are many issues that have to be handled at policy level, but also at practical level. And so we are hoping that with the Food Trade Coalition for Africa, we will be able to tackle these issues as a group in order to interact with the various stakeholders, whether from the private sector or from the policy sector, to create this kind of platform to discuss the issues and to have meaningful policies that, first of all, represent the interests of governments and of the private sector and the economic operators.
Deputy Minister for Trade and Industry, Oshri Befi, believes that with the implementation of the Continental Free Trade Area, Africa can make progress in curbing the menace.
It gives opportunity to everybody in Africa, especially in Ghana, to take advantage of trading, not only in the area of agriculture, but even other products that are also necessary, because we are talking about a population, a total market, estimated market of 1.2 million people, and we are talking about a combined GDP of $3.4 trillion. I mean, this is a big market, very big. And so I guess it is an opportunity for Africans and, for that matter, Ghanaians to take advantage of this, so that we will be able to operate to maximize more from Africa.
The General Assembly of the Food Trade Coalition Africa will be used to launch a food policy report in the coming days.
Now, local food juice manufacturing firm Ekumfi Juice has discounted claims the factory has shut down its operations. Management of the company says the company only reduced the production capacity as a result of a drought that affected the raw material base. Some distributors of the product across the country have complained they are not getting the required supplies from the factory. But speaking to JoyNews' Richard Kojinya, Operations Manager Frederick Kobnakwa revealed the company has increased its pineapple plantation to enable them deal with the volumes of demand on their hands.
Distributors of Eku Juice have complained the factory has reduced its production capacity and there are shortages on the market. Even though they have made payment for the product, the company has been unable to supply them. Many have even speculated the factory had shut down its operations. But operations manager of the factory, Frederick Kobnakwa, says the company hasn't shut down.
No, there's never been a shutdown. Okay, so this week, for example, there hasn't been any production because I checked the bricks levels that we use, and then we're going to have very small quantity to produce. For me, it would not make economic sense to push doing small quantities. So for this week, we've been down waiting to add to next week, because no matter how small, you know, you're going to turn on your boiler, you're going to turn on your air conditioners, you're going to fetch water, your lights will be on, etc. So if the quantities are not up to the volume that we expect, normally we consolidate in another week, and that's what happened this week. But there's never been a shutdown. What has happened in the past few months is that Central Region, at least our enclave, has experienced a drought, a long than normal drought. The rains have just come in, you know, and if there's drought, it affects us in the sense that it's not just about the rains not coming, but also the dryness of the weather. And so it affected us. So we have been producing a little lower than normal. So we've not been able to supply, especially for some of our customers who have paid in advance. And for us, it's so wonderful for a new product that you have your distributors paying in advance.
Well, that report ended the marketplace. Thanks for watching. My name is Darryl Kwao. More news on our website, myjoyonline.com/business. Goodbye.